In today's video, I'm going to teach you how to record a loan and loan repayment in Freshbooks. Understanding how to manage this aspect of your accounting processes can vastly improve your financial management and bookkeeping precision. Let's dive in. First, head over to Freshbooks, your go-to invoicing and accounting software designed specifically for small businesses. Once you're in, our first task is to record the loan deposit. Start by locating the deposit for your loan in the bank feeds. It's essential to accurately categorize this money, so click on the deposit and change the classification from a customer to a vendor. This distinction helps in maintaining clarity in your accounts. Naming the transaction is your next step. Opt for a clear and descriptive name, like SBA loan, to avoid any future confusion. With the naming established, navigate to the account drop-down menu and select Add New Account. Here, you'll set the account type to long-term liability. This classification reflects that the loan is a liability expected to be paid over a longer term. In naming this new account, something like loan payable works well. Remember, do not add a beginning balance to this account. Upon clicking Add, you've successfully shown the money in your checking account and also increased the liability on your balance sheet. This completes the recording of our loan deposit. Now let's move to recording the loan repayment. Before you create any entries, double check that the Journal Entries feature is enabled in Settings under the Accounting section. Keep in mind, this feature is best suited for users with some accounting experience, since journal entries in Freshbooks are non-deletable. Now let's find the Journal Entry button, either under Accounting or Chart of Accounts. With your date of payment at hand, prepare to craft your journal entry. The entry for recording a repayment consists of several steps. First, debit the interest expense account for the portion of the payment that covers interest. Next, debit your loan payable liability account for the principal portion of the payment. This action reduces your outstanding loan balance. Lastly, credit your cash or checking account for the total payment amount. This reflects the funds leaving your cash reserves. Once you've carefully completed your entries, ensure that your debits and credits are balanced. This balance is crucial as it guarantees the accuracy of your financial records. When everything is in harmony, go ahead and save your journal entry. By following these steps, you've efficiently recorded both a loan and its repayment within Freshbooks, making your financial tracking more precise and insightful. Thank you for watching, and if you have any questions, feel free to drop them in the comments below. Don't forget to like and subscribe for more useful accounting tips and tutorials.